Okay, let's unpack this. Welcome to the deep dive. We're here to sift through all the latest market intelligence, the research, and really bring you clear insights. Today, we're diving headfirst into the crypto market as of September 14th, 2025. And it is truly dynamic right now. This isn't just, another day on the charts. There's real excitement, significant movement. Bitcoin's leading a charge. It's reshaping things. Our mission for you today, cut through all that noise and really highlight what's essential to understand right now.
Yeah, and what's truly fascinating, especially if you look at the analysis coming out from places like Fidelity Digital Assets, they're saying the crypto market is firmly in this crucial acceleration phase of a bull cycle. And that's not just about prices going up. It means Bitcoin hitting new all-time highs. You've got this almost insatiable appetite from institutions and some really pivotal regulatory shifts happening that are kind of defining the future. So this mix, it creates immense opportunities, but also importantly, some notable risks we need to help you navigate today.
Absolutely. And when we talk acceleration, I mean, look no further than Bitcoin, right? That this is where it gets really compelling. Bitcoin BTC, it hasn't just recovered from recent dips. It has confidently smashed through and set a new all-time high. That's a powerful signal. Market strength, renewed confidence. And this momentum for BTC is not happening in a vacuum, is it? It's creating this big ripple effect across the whole altcoin market. We're seeing a really strong, broad recovery. ETH, Solana, DOGE, XRP, they're not just tagging along, they're leading the charge in many ways. And this whole surge is pushing the altcoin season index, which basically measures how many alts are beating Bitcoin, is pushing that index to new heights. It really shows a vibrant, expanding ecosystem beyond just Bitcoin.
And if we kind of zoom out a little bit, connect this to the bigger picture, a fundamental driver here is just the sheer volume of capital flowing into these spot Bitcoin and Ethereum ETFs. Now, ETFs, exchange traded funds, these are the ways traditional investors can get exposure to crypto prices without, holding the actual coins themselves. And we're talking billions pouring in. It's just a clear, undeniable signal of rapidly growing interest from big institutional players. They're using these regulated, accessible ways to invest. This isn't just retail speculation anymore. This is serious traditional finance making its move. And beyond those ETF flows, there are other things fueling this market. We just saw this successful IPO of Gemini, the big crypto exchange. That listing, it further legitimizes the space in traditional finance. Then you have Tether launching its USHE stablecoin specifically for the US market. Now, stablecoins, they're designed to hold a steady value, right? Often pegged to the dollar. USAT in the US, that's a big step for wider adoption within regulatory lines. And on the macro side, there's huge anticipation for the Fed's interest rate cut. Everyone's expecting that September 17th. Historically, lower rates make risk assets like crypto look more attractive, Borrowing costs go down, traditional low yield stuff looks less appealing.
But yeah, it's never entirely smooth sailing, is it? No. Especially in a market growing this fast. The excitement's definitely there, but we also need to be aware of some important risks lurking underneath. We've certainly seen how things like geopolitical tensions, tariff uncertainties, they've recently impacted the wider market, adds a layer of caution. And then there's the whole regulation puzzle. It's complex, it's evolving. You got the Genius Act, that's the bill for stablecoin rules still being debated in the Senate. Plus, there's a new digital asset market structure bill working its way through. And as a really stark reminder of the security challenges, we had that big Shibarium bridge attack. What was it, $2.4 million USD withdrawn?
That's right.
A bridge connects different blockchains, lets assets move between them. Their security is absolutely critical. That incident just hammers home how vital robust security is, especially in the altcoin space.
Exactly. And all these factors, the rapid price surges, the institutional money, but also these persistent risks, they're all hallmarks of what analysts like at Fidelity are calling this final acceleration phase of the bull cycle. And this phase, it's typically marked by extremely high volatility. Think sharp, fast moves, both up and down. And often there's a final significant price surge. It can feel almost euphoric right before a potential cooling off or consolidation. So this raises a really important question for you, the listener. How do you navigate this? A market full of opportunity, but also fraught with potential sharp turns, unpredictable corrections. It really demands a careful balance of optimism, yes, but also pragmatic caution.
That's a crucial point. Okay, so let's drill down into the really short-term stuff. What are we seeing, say, in the last 24, 48 hours? For BPC and ETH specifically. For Bitcoin, BTC, right now it's hovering around, let's see, $116,110 to maybe $116,141, showing a slight bump in the last 24 hours. But the real story, like you said, is the capital flowing into the spot Bitcoin ETFs. We've seen numbers anywhere from $642 million to over $1 billion USD just in the last 24 hours.
Incredible numbers.
It really is. And if these inflows keep up, some analysts are saying BTC could realistically hit $117,000 in the next, 2 or 3 weeks. It just shows the sheer buying power coming in. And then there's Ethereum, ETH, trading around 4,666 step tiers to $4,668. What's interesting here is while it hasn't quite broken its old high from November 2021, that was $4,867. It has recently outperformed Bitcoin in percentage gains. It even briefly touched $4,700. Just like Bitcoin, it's seeing significant institutional interest. Ether ETFs pulled in $405 million on Friday, shows strong demand for the number 2 crypto.
Yeah, and the whole stablecoin narrative is massive right now, you're right. Ethereum is, without doubt, the central hub for most of that activity. So this growing use, this demand for stablecoin transactions, it could really benefit ETH's price, especially if that Genius Act passes. If that brings regulatory clarity for stablecoins, well, that makes Ethereum an even more attractive, more trusted platform for financial innovation for institutions. It kind of solidifies its role as that foundational layer for DeFi.
So, okay, Bitcoin and Ethereum looking strong. What does this mean for the rest of the altcoin market then? Because it's not all moving in lockstep, right? Understanding which bits are benefiting and which might face challenges. That seems key right now. On the benefiting side, meme coins. They're definitely showing strong momentum. I mean, that segment often thrives on market excitement, doesn't it? Partly fueled by these Fed rate cut hopes, maybe the idea of altcoin ETFs coming to the U.S.
Right, more avenues for investment.
Exactly. Look at Dogecoin, DOGE. It's surged, 40% in just 1 week, aiming for 0.60 cents. Some are even talking $1 in 2025, though. That's pretty optimistic. And you see new projects like Pump.Fund getting traction, too. Shows that rapid community-driven side. Then you have stablecoins and the whole decentralized finance ecosystem. The scale here is just, wow. 2024 stablecoin transaction volume has already beaten Visa and MasterCard combined.
Think about that.
Come on. It's staggering. That level of adoption, you just can't ignore it. Tether's US8 launch in the US is key. And that Genius Act, if it passes. A clear regulatory framework would be a massive boost for stablecoin use in DeFi, even traditional finance. Think smoother global money transfers. And we can't forget Solana, SOL, and other strong layer ones of base blockchains. Solana is having a significant rally, trading around $248 right now. And look at the institutional interest. Galaxy Digital bought over $700 million in SOL. Forward Industries signed a $1.65 billion deal to build a Solana reserve fund.
These aren't small bets.
Not at all. These are serious commitments, show Solana's growing importance, its institutional appeal.
Right. But while those segments are booming, we need to look at the flip side, too. Some parts of the market are, well, more negatively affected, or at least carry much higher risk right now. For instance, you've got the new and low liquidity altcoins. They're particularly vulnerable. In these highly volatile periods, this acceleration phase, their smaller market caps mean relatively small buys or sells can cause huge price swings. That increases the risk of manipulation and potentially substantial losses for investors caught on the wrong side. And, critically important, those bridge-related projects or layer 2s with security issues, they remain a serious concern. That Shibarium bridge attack, $2.4 million, gone. It's a stark reminder. Bridge exploits happen when hackers find flaws in the code connecting blockchains, right? They steal assets locked on one chain that represent assets on another. It just underscores, again, the absolute critical importance of really robust, thoroughly audited security across the whole altcoin and cross-chain space, especially as more money flows through these systems.
Indeed. Really makes you pause, doesn't it? How fast things are maturing, but also how high the stakes are now. Okay, stepping back a bit, let's zoom out to the longer-term trends, thinking weeks, maybe months ahead.
Well, connecting this to the bigger picture again, the whole regulatory environment is going through a really massive shift. It looks like it's moving away from just reacting, case by case towards something much more structured, which could fundamentally shape crypto's future. Think about DeFi and RWA's real-world assets. If the Genius Act brings clarity for stablecoins, they could become the backbone for global money transfers. That paves the way for much wider institutional use of DeFi and also tokenized RWAs. Things like, tokenized real estate, commodities, maybe even government bonds living on a blockchain. We're already seeing firms like Centaura building institutional-grade DeFi platforms with strong risk management. And look at the tech integration, AI agents paying APIs with USDC stablecoins in just 200 milliseconds. Shows the practical speed and utility. And regulation itself. The new SEC chair, Paul Atkins. That's a significant development. He's made creating a clear, specialized legal framework for digital assets a key priority. That's a real departure from past approaches, which often tried to cram digital assets into old securities laws that didn't quite fit.
A much-needed shift, potentially.
Yeah. Potentially, yes. could bring certainty, foster innovation. The CFTC is also active, supervising things, approving projects like Polymarket, the predictions market. And what's truly fascinating, kind of a testament to crypto's growing legitimacy, is this trend of many nations now seriously considering setting up strategic crypto reserves, treating digital assets maybe like they treat gold or foreign currency reserves.
Yeah, and here's where it gets really interesting for the broader global economy, too. That accelerating acceptance by traditional businesses. The number of public companies actually holding Bitcoin as a reserve asset, it's surged dramatically. I mean, we've seen that number jump from just one company to over 75 in a relatively short period, and apparently more are planning to follow suit. You combine that trend with the successful ETFs and their steady inflows, it really signals a structural shift, doesn't it? How businesses, institutions view crypto, approach it, integrate it. It's moving beyond just speculation for a few to becoming a recognized strategic asset class for many. So for you, the learner, trying to navigate all this, having the right tools, knowing what to watch, it's crucial. What are the key indicators you should really be keeping an eye on right now? First up, maybe the DXY, the US Dollar Strength Index. It measures the dollar against other big global currencies. It's a key macro factor. Generally, a weaker DXY tends to be good for risk assets like crypto capital flows out of the dollar. A stronger DXY, the opposite. So tracking the DXY helps you gauge that broader global market risk appetite. Next, definitely ETF flows. It's such a direct indicator of institutional interest and adoption. We've talked about the very positive inflows right now for both Bitcoin and Ethereum ETFs. You want to track this data daily, weekly. It usually comes out with about a day's delay from places like CoinGlass, CryptoQuant, CoinMarketCap, Bitcoin Magazine Pro.
Yes, several good sources.
Right. These numbers give you a real-time pulse on where the big money is literally moving. And finally, the Crypto Fear and Greed Index. Always interesting. It gauges overall market sentiment. Right now, it's showing greed sitting around 55 to 57 points. Now look, optimism is essential for a bull run, right? But extreme greed that can often signal a correction might be coming. So monitoring this index helps you assess the emotional climate. Are people getting carried away? Are decisions driven by herd mentality or fundamentals?
It's a good sanity check.
Exactly. A sanity check against pure exuberance.
And given this acceleration phase, with all the expected high volatility, it's not just about knowing what's happening, but really understanding how to manage your exposure effectively. So how can you approach this market thoughtfully, rather than just reacting to every single price jump or dip? Well, first, think about your position management and stop losses. In a market this volatile, setting clear stop loss levels, it's not just good practice, it's kind of essential. Protects your capital, protects profits from those sharp, unpredictable downturns typical of this phase. You might also want to consider reducing your position sizes a bit just to mitigate that amplified risk during these choppy periods. Second, diversification. Still key. Yes, altcoins are doing well, but it's generally wise to keep a diversified portfolio. Foundational assets like Bitcoin, Ethereum, plus other established alts with solid fundamentals. But exercise and considerable caution with the newer meme coins. They often lack clear utility, can be highly speculative, prone to really rapid corrections. Third, prioritize that regulatory and macro monitoring. Stay updated on the news, especially the Genius Act progress in the Senate. SEC's stance under Paul Atkins, any shift there could trigger big reactions. And Fed rate decisions, global macro indicators, they hold sway over all risk assets, including crypto. Fourth, avoiding FOMO, fear of missing out, and just managing your emotions. This is crucial. The Fear and Greed Index shows excitement is high. It's easy to get swept up when everyone's talking gains. We've all felt that urge to jump in.
Well, yeah.
But that's often when discipline matters most. Try to make decisions based on objective analysis, your own strategy, not just pure emotional reactions to price swings. And finally, limiting leverage. If you're trading derivatives, using excessive leverage in these volatile conditions, it can lead to rapid liquidations, significant losses. Maybe consider reducing leverage to mitigate those amplified risks. Protect your capital when the market inevitably makes those sharp turns.
That's incredibly practical advice for trying to manage through these really intense periods. Wait, looking just beyond today then, what specific events should you be watching closely in the next few days as this market keeps moving? First, keep a very close eye on the progress of the Genius Act for stablecoins in the Senate. Second vote is expected soonish, right? The first one failed back in early May. Any news on that will have big implications for stablecoins, for DeFi. Could unlock a new wave of institutional money. Also, keep watching the ETF flow data for Bitcoin and Ethereum. The reports for September 14th activities, they'll give the latest snapshot of institutional action. Consistent inflows reinforce confidence. A slowdown might signal caution. And of course, any announcements or reports from the regulators, SEC, CFTC, always critical. New guidance, statements from SEC Chair Atkins on digital asset rules, new CFTC actions could definitely move the needle. Lastly, listen for macro comments from central banks. The Fed's big rate decision is the 17th, but comments from Fed officials before then, or from the European Central Bank, they just had their policy statement.
Those comments offer insights into economic outlooks, monetary policy, and that ripples across all risk assets, crypto included, influences liquidity, risk appetite. So what does this all mean for you? Look, we've covered a huge amount today. From Bitcoin's record highs, the powerful surge in institutional money, to that intricate dance of regulation, the vital importance of risk management, it all points to a truly pivotal moment in crypto. It's a landscape with dizzying heights, potential pitfalls, but also immense opportunity for those who stay informed.
Absolutely. This deep dive really shows us the crypto market is just this complex, rapidly evolving ecosystem. Understanding how technology, regulation, macroeconomics, investor sentiment, how they all interplay, that is absolutely key to navigating it effectively. Informed decision-making, rather than just speculation, that's truly your most valuable asset here.
And as you reflect on today's market, maybe consider this. With so many nations now actively exploring setting up strategic crypto reserves, treating it like gold or foreign currency, what does that truly signal about the long-term future of digital assets in the global economy? Is it just another financial tool for diversification? Or are we actually witnessing the early stages of something much more fundamental, a structurally important shift in how global economies operate and safeguard their wealth? We'll leave you with that thought. Thank you for joining us on this deep dive, and we definitely invite you to continue your learning journey with us.